Hello and happy Tuesday, everybody. Thank you
We're
for
back.
joining us. This is going to be a spicy stocks from scratch day. I think everybody knows why we are here. We are talking about, God, this might be the most hyped IPO I've ever seen.
I think Meta is the only thing that comes close to it. Because I remember when Meta went public, back when it was Facebook, that was on par with this. We'll see what happens over the next couple of days, but so far it's looking like investors in SpaceX are faring much better out of the gate, which, we're long-term here, but seems to have been going much better for those investors than Meta did back in 2012.
Yeah, definitely off to a better start. Although Meta went up a bunch and then it kind of crashed thereafter.
Yeah, that's why I said we got to wait a little bit.
As everyone here hopefully knows, we don't care so much about what the stock is doing today. We care about the business and the business for the long term. So that is what we are going to be analyzing today. Okay, good. Just got to make sure that works. So here's a new way of thinking about stocks.
I don't ski. So explain this one to me. I don't ski.
For those that don't ski, if you go skiing, they basically break up the trails into 4 difficulty levels. So there's green circles, easy. There's blue squares, medium. There's black diamonds, hard. And then there's double black diamonds, which are like expert only. When I think about analyzing this company, in my mind, no doubt, this is expert only.
We need another one. It's like being dropped from a helicopter on top of Mount Everest.
Yeah, this is one of the hardest companies like ever to analyze, because not only is it difficult to analyze just a rocket business, but this is like 3 businesses in one. So that's what we're going to be attempting to do here. Now, we would love to know from the people that are here, do you own this stock? Did you get in at the IPO? Because boy, are you happy if you are. So let us know in the chat if you've become a shareholder in this stock. Did you get any stock, Stoffel? Were you interested in the stock?
No, I wasn't. There's so many moving pieces, and I just generally tend to stay away from IPOs, especially, for those that understand the dynamics here, this is a very small float. So I think maybe like 4 or 5, I could be wrong about this, but a very small percentage of shares outstanding are actually available. So
our colleague, Justin, who was on the stream last week, I know for a fact he got in at the IPO price, so he is doing quite well. At least, yes, somebody was. Jim was able to get into the IPO.
We do have a hell no in here as well. Just oh, and Paul got in as well, and Bob got in. All right, so we got a couple.
Yeah, well, fair enough. So this is going to be, again, a harder to research stock for a number of reasons, but because this company just came public, boy, is getting great information on this company going to be hard. Now, we're going to be using our homemade tool that we have, Stock Simplifier, to do the research on this stock. So let's go ahead and get this rolling. So SPCX,
correct.
SpaceX, Space Exploration Technologies. This is a $2.7 trillion market cap company.
I heard overnight it touched 3 trillion. I heard overnight.
So anyway, yes, that does look like the correct company to me. So if we compare it to the market, boy, is this thing crushing the market since it came public on Friday. It's up 56% versus just 2% for the S&P 500. So, okay, the mission here, which I know actually just recently changed. So this is the most up-to-date one: to build the systems and technologies to make life multiplanetary, to understand the true nature of the universe, and to extend the light of consciousness to the stars. Thoughts?
I think the most important part there is the multiplanetary part.
Yeah.
I love the other stuff. It's very Star Trekian.
Yeah.
But that is, if you want to know the direction that they're headed, there you go.
I wish it was just to make my life multiplanetary.
Me too.
To me, which is what it was. And I think you could give defensibility to all of those. So since we're here, I'm going to go ahead and take a note on that. I'm just going to make a note of that is the mission. Okay. So SpaceX is a rocket and satellite company that grew into 3 businesses. So it launches payloads to orbit on reusable Falcon rockets, and it's building the much larger Starship. That's business 1. Number 2, it sells Starlink satellite internet to homes, businesses, ships, planes, and governments. That's business 2. And since early 2026, it runs an AI business built on the Grok models, compute, and advertising. Most of the money now comes from Starlink rather than from rocket launches.
So what I just want to say about that is two things. My understanding, and I did read through the company's initial prospectus, so I could be wrong about this, but my understanding is that they built these rockets, and the thing is, there weren't that many customers for the rockets. Now, the whole idea here is that this is going to change dramatically in the near future. But in order to fund itself, it became its number one customer.
It became its one customer.
Starlink satellites. The other thing I want to point out is this. Many people know that my family and I, we live in Costa Rica during the winter, and we don't live in the beach in some, densely populated area. We live up in the mountains, and I run services and do my YouTube videos from there now because of Starlink. And I will say the improvements are phenomenal. The service that I got the last time, I use Starlink, but I used to have to go to a very specific area on the coffee farm to get a good enough signal. Last time that we were there, I could just wake up, go up to we live in a container home, just go up to the second floor, and I was fine. I had to walk like 20 feet. That's it.
Amazing.
So it's real.
I remember you had a problem one time where it was in the sun and it got too hot and it stopped working. So I hope that problem is solved too.
That's solved.
Okay. All right. So what makes this unusual is that it turned a cost center into an engine. So reusing rockets drove the price of each orbit down far enough that SpaceX could use its own launches to build a satellite network no rival could afford to deploy. And that network is what pays the bills today. The launch business that built the lead is now smaller line. So the launch business is now its smallest business unit.
Yep.
The broadband network is enabled the largest, and the new A line is the one consuming cash. Okay. Who are the customers? 3 distinct set of buyers. Consumer and business broadband. That's you.
Yep.
This is the fastest growing customer group. Okay. Government and national security, NASA, big government agencies, enterprise, marine, and aviation. So these are also Starlink purchasers. And then finally, advertisers and AI users. The newest group reaches the social platforms, advertisers, and the users of the Grok model. All right.
So wait, is Twitter rolled into this, or is it not?
Yep.
It is. Okay.
It is. That's X. That's XAI. Right. Yep. All right. So businesses by category. So this is as of last year, fiscal year, 18.7 billion. So consumer is 39%. I'm guessing this is Starlink. Yeah.
Connectivity. Yeah, that's me.
Yep. Consumer is 71%. Enterprise and government is 22% at 4 billion. Launch services is only 14% of revenue.
Yep.
2.6.
Yeah.
Advertising is 10% at 1.8 billion. Launch and development. Oh, that must be, if you cobble those together, depends on how you count it. And then AI solutions and infrastructure. So no doubt Starlink is the biggest, right?
It's the bridge. I mean, that's the idea, is that it's the bridge. The thing is it was kind of just not invented, but it was there to help the company build the launch business.
Yeah.
And they created a winner just with that.
Starlink, here you go. Starlink is 61%, SpaceX is 22%, and AI is 17%. That's the rough breakdown, right?
It is just worth really quick pointing out that the compute service leasing has become part of it. They've signed some huge contracts. Huge. Yep.
And keep in mind that this is 2025.
Yeah.
So those are newer.
Yep. And I believe Google was the other one. And I believe it's all from a supercomputer they're building in Memphis, Tennessee.
Yep. So again, the point of these is to just give you business snapshot, right?
Yep.
Business snapshots. And we look at the last year. Hey, what was happening last year? It's unusual that a company launches a brand new business segment and that changes this dramatically. So snapshot, US is 70% of revenue. All other countries are 17%. Ireland is 10%.
I think that might be for launch services.
Okay. And then Canada is 4%. So 31% international so far. All right. Quality questions. How predictable is revenue? Predictable. Would you guess?
Because Starlink is so big. That's why. Because we think of SpaceX and we think of rockets.
Yeah.
But really, we should be thinking about little mini satellites. I wish I had mine with me so I could show it to you.
Internet company in the sky is basically the business with a rocket kicker. So Starlink is the largest line item, billed monthly to more than 10 million customers that pay like any home internet, dominant revenue stream. So believe it or not, this company has recurring revenue as its largest segment. Now, there are lumpier pieces on there. Advertising is also recurring. The launch business is going to be the most month to month or quarter to quarter, but very overall highly predictable revenue, something very impressive. Can it raise prices? Launch has few real alternatives, so SpaceX price is above its struggling rivals, but Starlink revenue per user is falling on the mix, and AI faces the biggest players. Yeah, my first thought here would have been easily pricing power, but when you think about like Grok, what place would you put Grok in? Fourth? Fifth? Yeah. Like they don't have premium pricing, and that's a big cost driver for the company. The rocket business, dominant. Starlink, probably pricing power, but if they're going for the globe, then price becomes really price sensitive.
But here's the thing. Here's the thing that you got to remember is I believe that they do have pricing power within geographies.
Yep.
Like there is no alternative in Costa Rica. The reason that it's falling is not because necessarily they're charging less for a US consumer. It's because they're expanding to, say, sub-Saharan Africa, and you can't charge the same amounts. So you got to be able to see the forest from the trees here.
Okay. So can the company raise prices? I think I agree with sometimes. It depends on the business unit. It's not 100%, right? Yep. This isn't a company. This isn't Louis Vuitton with infinite pricing power or whatever. All right. Is this company recession-proof? Strongly recession-proof. Home internet is a must-pay bill. Government launch connectivity are on space budgets. So the largest two sources hold when the money is tight. Yeah, you have no alternatives if you're in a remote area. So the cyclicality is actually fairly small, given that launch services are so small, and demand is essential. Yeah, NASA doesn't plan out space missions by what the economy is doing. Yeah. So I'll agree with that. Recession-proof. And then finally, competitive position, dominant. The most launches in the world, leader in reusable rocket technology. The AI is the weak spot for them, at least for now. I wouldn't bet against Elon coming out of there, but there is overall of the business. All right, viewers, time to vote. How would you rate this business on a scale of 1 to 5 with how interested you are in SpaceX business? So 1 is a nope, this thing is a total pass. 5 is a yep, hell yeah, want to keep learning about it. And we asked this question first for a reason. If you read about a company and you're like, yawn, not for me, then you just stop your analysis here. It's, do you want to keep going beyond that?
I mean, for all the jokes aside, I'm still very much a 5 on this. Like, yeah, ditto. It's super interesting to me.
Yeah, I think the predictability of revenue, the recession-proofness of revenue, and the semi-pricing power alone gives it a 5 out of 5 interested. Now, if you want to go far deeper into some details, we have way more details in this deep dive that you could look at, but I'm not going to read all that right now. I want to go into some deep dives on things like valuation before we get there. So 5 out of 5. Great. Yep. Yep. Here's a great point that they purchased Cursor. I think that deal is still pending. So
I think it was just announced like today.
No, that was announced like a couple weeks ago, I think.
Was it? Okay.
I don't think it's gone through yet. And keep in mind that this, what we're looking at here is off of the S1. So the registration documents that have gone through, this company hasn't reported earnings yet. So we don't even have a 10Q on the company. So we're just going off the S1. So information will continue to flow as this company is public longer. All right. Question number 2, which phase of the business growth cycle is this company in? So there are 5 distinct phases that a company could be in. AI says phase 1, startup.
So this is where I think some explanation helps. I think we talked about there being 3 businesses, right? I think Starlink is actually in phase 3. I think.
Yep.
I think that the launch business is in phase 2 or 3.
Probably.
but it's the AI business. I mean, if you look at the S1, the capital expenditures that they're putting into Colossus, the supercomputer, are mind-bending. It was above $10 billion if memory serves.
Yep.
So
So
that's phase one.
I think this is totally phase one. If you look at their operating profit, they were actually profitable in 2024. So this is going to be a double black diamond difficulty level here. So revenue is growing. I think we just have 3 years of data, basically. Lost money, made money, and then lost money again. If we click this button right here, we can go right to fiscal. Fiscal is still building out its database about this company. Here, I'll zoom in a little bit just so you can see this. But gross margin is about 49%. Yep. So there's the operating profit. So losing money on that basis.
If you go to the segments and KPIs, that really kind of tells the story too, because
by segment.
Yeah, you got space, consumer. Yeah.
Yep. So space EBITDA is profitable. At least on an adjusted EBITDA.
I mean, look at the consumer or the connectivity. I mean, that's amazing.
Yeah. And this is 25. Yeah, this is adjusted EBITDA. So actually forget this number. Let's go to EBIT. That's a better number to look at. So space is unprofitable on EBIT. Connectivity is hugely profitable. What a fantastic business that is. And then artificial intelligence is minus $6 billion.
Look at the CapEx. Look at the CapEx.
Yeah. 12 billion in CapEx. And that was last year.
And you can put it on quarterly, and I think it will show you the most recent quarter, because they came public after what would have been if you go down, their capital expenditures are just, I mean, look at that. They added quarter. So it jumped. It's 15 billion. It's 5 billion more than where it was in that last view that we saw.
Yeah. So we get connectivity on subscribers. Wow, look how fast this is growing.
Yeah.
4 to 10 billion. They basically doubled.
Works really well.
Yeah. Yeah. So again, we are here to try and figure out what phase are they in. If you look back at their history, so they were in phase 1, then they were in phase 3 because they became profitable. Now back to phase 1. So yeah, figuring out the phase here is hard. Buybacks. Okay. There's actually buybacks. That's fascinating. They repurchased 1 billion of stock, but its share count still rose by 3%. So the buybacks were more than offset by new shares. So this counts as dilution, not a return of capital. I think that's a pretty key distinction there. So 1, 2, 3, 4, or 5. I think, again, this is a very difficult one, and it depends on the business. But I think if you're going company level, which we are, you have to say 1.
Yeah, I do too. I do as well.
Yeah, this is a $2 trillion startup.
Yeah. Bob's asking about debt. We will get to debt when we get to one of our further ones.
Okay, for sure. Okay, next question is Moat. All right, let's see if we agree with AI higher. SpaceX has a narrow moat, a dominant launch edge in 2 lines, but the consolidated business earns no excess return yet. So real cost and cadence, reusable rockets, each orbit cheaper than any other rival. No excess return. So broadband is profitable, but the company is losing money on the AI build, where it trails its peers, and the lead is commanding launch and broadband, but weak in AI. So I think if you assume that it didn't have an AI component to it, this would be 5 and 5. But with the AI component in there, which is a cash drain, it's saying overall business, narrow moat, but the moat is widening.
I would say it would depend. For the launch business, I wonder, I'm a Rocket Lab shareholder myself, if I would give them a 5 for the widening around the launch business, if the Neutron rocket successfully launches that can get to orbit. I know that they don't go after the exact same customers, but it's at least stable.
Sure. Okay. Well, what about Starlink? Do you think that lead's growing?
Yes, absolutely.
And that's the cash cow right now.
Yep.
So network compound. Starlink crossed 10 million connectivity, and more satellites and users make it hard to copy. No source code, no rival has closed the launch gap or matching. Okay. So switching costs, hardware and integrated lock-in enterprise, marine and maritime. But the largest consumer base is billed month to month with no long-term contracts. So the friction to friction is real, but not decisive. You basically have to say, I want to turn off internet service, at least for right now.
Well, I mean, the big thing is just when we talk about the moat, we can talk about where it is right now or where it's going. And the question for an individual investor is, how much of this depends on Starlink and how much of it is based on everything else?
Yep.
Because I do believe Starlink has a moat and it's very real. We can talk about AST Space Mobile if you want, but it's very real.
Okay. Well, so switching costs, this is moderate. Would you agree?
Yeah, I would agree with that.
Okay. Scale, help customers. So this would be network effects. Do you think that there is network effects here at all? So the launch, not so much. AI data flywheel. Yeah, really hard to say yes on that one when you're not a leader. Consolidation density. Yeah, it's giving it somewhat. I don't know if I would give it one. I would go red there probably. But anyway, it highlighted that. Brand, national security right. Yeah. Does this company have intangible assets? So brand or licenses or things like that. Everyone knows the brand name SpaceX. I think the brand name Starlink is also extremely strong. So it said Starlink's authorized spectrum and are scarce assets that a new entrant simply cannot buy, the most durable, intangible protection, the network. So yeah, okay, I'd go with that. And then finally,
to me, this is the most important one.
Does the company have a cost advantage? I mean, everything I've ever read about SpaceX has been like, this company is the low cost producer by far and away.
So I think is it like dollars per kilogram or something like that? Like, I can't remember what the exact metric is, but it's far and away the best.
And if they can make Starlinks truly reusable, like that's an unbelievable advantage. All right, let's hear some voting here. So what would you give the state of SpaceX's current moat? So 2 numbers. The first number is on the size, 1 out of 5. How would you rate the current moat size? And again, entire business, not just one segment. And then second, direction. What would you rate as the current direction of the company's moat? So AI said 3 and 5. Curious what people are saying.
I'm gonna even put mine in there. I'm gonna type it in right now. There we go. Yeah. Hey, look at that. Oh. I realized when I type it in, it shows up as you saying the same thing.
Yeah.
We got basically 3s and 5s, 3s and 4s. I'm a 3 and a 4 just because I do believe that the launch business has some entrants coming in. I don't think it's really going to hurt, but it's different than a 5.
So you think 3 and 4?
That's what I would do. Yeah.
All right. I think I would go.
The hard part.
I almost want to say 5 here, but I might go a little deeper here.
Okay.
Yeah. I don't think it's 5 and 5. I don't think it's 3 and 3. I'll go 4 and 4. We'll split the.
To me, it's definitely widening.
Yes.
Like overall, the hard part is that the one business that they're pouring all of their money into, is the one where I have the hardest time knowing if there's a real moat there.
Yeah. Also the highest risk, highest risk bet. Okay, we're going to do GrowthNet. Bex, if you guys are interested in Stock Simplifier, the tool that we are using to do this, we have 2 plans for you. So we have a standard plan that is about $16 a month. You get 20 analysis. You get the basic analysis, basically everything you're seeing on the screen minus the deep dive and the reverse DCF. If you want the reverse DCF, we have a pro plan that goes into the deep dives and everything like that. Normally $33 a month. If you use the code that Stoffel is about to share, we will knock that down to just $24.92 per month. That's $299 billed annually. And just for people that buy during this live stream as a thank you, we will also unlock the Buffett method, our course on how to read financial statements included. So anybody that chooses the pro version during this live stream, we'll do that for. All right. If you could share that link, Stoffel.
Yep.
And time to do a growth. So this says 5 out of 5. Analysts expect revenue to grow 85% next year, an exceptional pace, and even setting aside the newly consolidated AI business, the core has compounded at about 1/3 a year, so 33%. Okay, the consensus calls for revenue at 35 billion next year against 18 billion this year, a step up faster than than a typical large cap company grows. I'm guessing a huge amount of that number is those deals that it signed.
Yep.
Yeah. So it signed a deal with Anthropic and Google, I believe.
Yep.
Like $1 billion a month.
The Google, no, more than a bit. It's like a couple billion like a month. The Google one is one that has lots of outs. So the idea being that if capacity somehow becomes available, Google has an easy out. But the thing is we're $24 billion a year, so $2 billion a month. Thank you, Justin. The huge question here is if supply and demand sometime match in the near future, that Google contract is going to lose its value real fast. However, I mean, this is the thing that I can't wrap my head around is I'm so used to supply and demand usually fixing itself within a year, right? When we talk about oil or things during the pandemic and the supply chain, eggs, like that usually fixes itself pretty quickly. This AI has not shown that at all. So they could have the leverage for a lot longer than we think.
But just do that math out. So it's, I guess June. Yeah, I was thinking it's early in the year. It's June. So 6 months of the year times 2 billion a year, that's 12 billion right there. Plus, you got to figure that this number is growing as well. So this number might be, well, conservative, but we'll see. Either way, 85% is what analysts are currently expecting. Put enormous error bars around that number. The legacy base grew 15% last quarter. So much of the forward jump is the full year of the newly consolidated AI line, not pure acceleration. So there you go. This business is only growing 15% core, and those new business deals are almost the entirety of that 85%. Organic engine is fast, even setting aside revenue rose by about a third this year and a 34% two-year run rate, carried by broadband that more than doubled. So the trend is durable. So revenue growth, we don't even have CAGRs yet. We saw what earnings were doing. All right. And then high level questions about growth. Is the industry growing? Oh, yes. Satellite broadband launches / space and frontier computer models. No doubt tailwind industries, right?
Yep.
Can new offerings drive growth? This might be the thing that I think Musk is best at. When you buy into one of his companies, he creates entire new business lines from thoughts. So that is absolutely so, like Starlink was only a thing like 5 years ago.
Yep.
Right? When the initial investors in SpaceX did not see Starlink coming. So huge optionality. So I have a feeling I know how people are going to vote on this one. So 1, 2, 3, 4, 5. What do you think of SpaceX's long-term growth potential? And as a side note, if a business is a phase 1, 2, 3, 4, 5 of the business growth cycle, it better have extreme growth offsetting the awfulness.
I'm a little curious. If you click on that deep analysis, I know Justin just put in a couple new things in there where they talk about optionality specifically. There we go. So optionality. Starship opens markets the current business can't reach.
Yeah.
So larger payloads, direct to device. I mean, that is going right after what AST Space Mobile is saying that they're trying to do.
Oh yeah, if you could get Starlink on your phone.
Right. So those who might not be aware, the whole idea behind AST Space Mobile is you don't change any of your behavior. You still buy your phone. You still go with AT&T or Verizon or T-Mobile. It's just built in, and you pay on top of that.
Yep.
Whereas with Starlink, you need a physical device, and then you connect to it much like you do your own modem in your house.
Yep. We haven't seen, or at least from the AI perspective, that is optionality here. Like I haven't seen, it seemed like 6 months ago, it was like the leader in AI was changing every week with every new model launch.
Like that anymore.
It seems like Anthropic is now the faraway leader for the last 6 months. Call it something like that. But again, don't bet out Elon when it comes to AI, his franchise and the whole, data centers.
They rented it out. This is a part of my own investment thesis in Meta, is just that even if what Meta is trying to do fails, this day and age, they could still rent out their capacity and get top dollar for it.
Become a REIT of sorts.
Yeah.
Yeah. All right. Key numbers are revenue growth, 2-year revenue growth, Starlink subscribers, definitely that's the profit engine, international, and launches. Definitely things to watch. All right, what do people say?
Yeah, they're all 5s.
All
Couple
5s.
4s.
Better,
You got
and
one
that
10.
better be a 5. Okay, this one will be interesting. Management. This says decent. AI says Elon Musk is a decent owner. He's the leading launch. He built the leading launch business and largest broadband network from nothing and still run the company today. Held back by an unproven AI bet. He's still in control. He's the chairman, CEO, and CTO, and the controlling shareholder. The operation's great, but the bet has been unproven.
The bet being AI.
That's fair. Yep. Concentrating. Yeah. No doubt that this is a Musk-controlled company.
50%.
Yeah.
That's a lot.
And his voting power is 84%. So, yeah, enormous. Do employees like working here? 3.8 out of 5. I mean, that's pretty
good.
Given, mission versus long hours, that's very Muskian, right?
I actually think that's a pretty good score.
Yeah. Okay. Do they beat expectations? No way to tell yet. Absolutely no way. Are they shareholder friendly? Really hard to, sort of. And then operationally, this is always a financial metric, and it's looking at operating margins. Again, this is swinging. I don't know how you don't give Elon Musk a 5 out of 5. Like, I don't know how you don't give him a 5 out of 5. If you hate him, whether you hate him or love him, he turns stocks into wealth. Like,
well,
period.
And not only that, I'll even go pretend there was no such thing as the stock market. Like, I couldn't connect to the internet 5 years ago in Costa Rica.
I don't know how you don't give it a 5 out of 5.
Yeah.
To me, that's an obvious one, even if AI disagrees. All right, execution risk. Oh, this should be interesting. This says very high. There's very high risk here. SpaceX burns cash by design. Free cash flow negative 14 billion. Leaning on forces it can't control and depends on one customer for a fifth of revenue. So free cash flow hugely negative with massive capital expending. Outside forces. Launching license government budgets, spectrum and orbital authorization, sensitivity to capital markets, all gate a business that depends on continued heavy financing. And strengthening keeps it from worse. The broadband line is profitable and growing, 25 billion in cash against modest debt.
So there we go for Robert. That was a question from earlier.
Which is why the red light is high versus extreme. So if we go to the balance sheet, let's just check the financials. So this is as of March. I don't know if this is post IPO. I don't think it is.
No, so you got to add $75 billion. So they have
I think it was 86 from what I saw.
So it's over $100 billion in cash.
Yeah. Yep. And then their debt is 28 billion.
So they probably have they probably have 4 times more, 3 to 4 times more cash than debt. Yeah.
So to me, from a cash perspective, but even still, they're burning how much in free cash flow each year?
They're at a run rate of, I bet it'll be $20 billion. So they've got probably a 5-year runway, but that picture is going to change fast, and we don't even know in which direction. The Anthropic and the Google deal make a big difference.
Yeah. Oh, for sure. But my view on debt is if it's attached to a rock solid, dependable business, I am much more comfortable with debt than if it's attached to a cyclical one. As we learned from the business section, I think this company's revenue is far more dependable than you would otherwise think a rocket business would be. That is hugely surprising to me as a novice to the space, that there's actually space businesses that have far more predictable business models than you would expect from the outside. ASTS was like this too. I mean, not ASTS. Rocket Lab.
Yep.
Was like this. Okay. Again, I'm not going to even vote here. I don't even know how you don't call this very high. It's dependent on so many things, to say nothing of they have to make seemingly impossible technologies work for them to do it. So even if you think it's high, because of the huge cash, that definitely helps. I'm going very high.
Yeah, I do too. I think you have to go into this with the eyes wide open. I mean, it literally is rocket science.
All right. Stock Simplifier does not have valuation. We need 20 days of history before we can actually show you a chart. So that is coming. But in our deep analysis, we actually have a whole bunch of context here
I want to read through
that we can look at. Okay. They began trading in June 2026. So the valuation has a level, but no history yet. So a market valued at roughly 2.3 trillion, a share price near 174, just a few days of trading, no meaningful price trend, no multi-year history. Yeah. Earnings don't matter here. No kidding. The level is rich on every available measure, which is the whole valuation story. 2.3 trillion against 18.6 billion in revenue. The company trades at 122 times sales and 246 times gross.
It's even higher now because it's 2.8 trillion.
2.8 trillion. Okay. Even measured against next year's numbers, it's 66 times sales. Those are extraordinary multiples that price in years of growth in the business and they're delivering. The valuation is not anchored to the current profits at all. It's a bet on the scale the company is expected to reach. All right. Well, still, from a phase perspective, price to sales is absolutely the way to go with a company. Secondary, price to gross profit. Although, how do you even think about this company's long-term gross margin? I don't even know how to think about that. The broadband one, I would guess, is pretty good. AI, I have no question. All right. Valuations versus fundamentals. Growth is the price. Growth, the price is clearly paying up for. SpaceX is growing revenue about a 30-year organically, and that's expected to double 85% with the AI changes. Connectivity, it means the market is not paying for growth so much it is pricing in many more years of it as planned. Profitability is the gap the multiple is leaning over. The picture is not cheap for quality. The picture is not cheap for quality.
I agree with that.
Yeah, loses money at operating, so free cash flow is deeply negative. Capital expenditures are $20 billion a year. The company is years away from showing what's new. The broadband is genuinely profitable, but the company as a whole is not. So the buyer is paying an extraordinary multiple for a business whose consolidated economics are still in the red. All of those are completely fair. The cash position is under the belt. Yeah, this number we know is...
But especially once that number gets adjusted for what they raise.
Yeah.
I mean, that's going to be a big number.
So here's the most important section to me. What is the market pricing in today? Years of compounding, taking largely on faith. And more than 100 times sales and a steep forward multiple, the market is pricing in sustained rapid growth in all three businesses and eventually swing to strong profitability. This is an optimistic valuation, not a skeptical one. The price bakes in Starlink keeps growing, the launches hold, and the investment turns into a real franchise all at once. So at today's valuation, you are pricing in sunshine for years.
I like this next bullet point the most because I think it really drills down the most.
The specific bets, the optimism rests on, first, the broadband network, keeping on subscribers. Second, the next generation rocket reaches reliable, high-capacity flight and opens new markets. Third, that the large, loss-making ad business grows into its spending rather than draining cash indefinitely. The evaluation assumes most of these lands.
I mean, the one thing I will say is that the amount of committed spending between Anthropic and Google that came in the last month.
Months for sure. Yep.
I mean, that's if SpaceX were a person, that's life altering. That's happened in the last month
for sure. That changes the multiple very, very, very quickly, but the multiple expanded drastically. Remember this company came public at 135.
Mm-hmm. And it's at one. I've got it at 215 right now.
Yeah. What would need to have come true for the multiples to look reasonable? The company has to convert its leadership in launch and broadband into durable, consolidated profits while the AI bet matures, all before the cash cushion runs thin. If broadband growth slows or the AI loss persists, the extraordinary price will have gotten ahead of the business, and there's no trading history to anchor this at all. All right. I also have a feeling I know how people are going to vote, but what is the consensus here for SpaceX valuation today? Is it 1, extraordinarily expensive, 5, extraordinarily attractive, or somewhere in between. I know my feelings on this one, but I think that this is the key thing here, that you have to understand what is being priced into the stock today.
The one thing that I will say, and I know I'm repeating myself, but it's to prove a point. If deals akin to Anthropic and Google keep rolling in, that would change my mind about this.
Sure.
And there's no way to know. Are they one-off in nature, or is there going to be some regularity to, I mean, to me, that's the whole medium-term ball game right there, because the launch is the launch is the launch. They need to get their next generation up. Starlink is Starlink. It's great. To me, if those deals can keep coming in, I would give it like a 2 instead of a 1. But there's no way to know.
I view Google pulling out as actually a fairly low risk. Everything I've seen about them has basically said they are compute constrained. And
but nobody has said they're not compute constrained. That's my point. Is
the question is, how long is that going to be the case? How long
AWS might be next?
Yeah. If they did pull out of there, I mean, at $1 billion, that'd be a $6 billion, that'd be a $12 billion per year hit. So that would make it look hard. When it comes to things like this, like stocks like this, a key question that I like to ask myself is, who is in charge of this stock right now? Is it fundamental investors? Is it momentum investors? Or is it traders? Right now, it's traders. Traders are in charge of this stock. And if you are buying this stock so that you can flip it tomorrow to somebody else, or even later in the day to somebody else at a higher price, this is a great stock, and valuation does not matter. But I'm a fundamental investor. So to me, I don't know how you don't agree with the crowd here and say 1. Just extraordinarily expensive. So to review, awesome business in the startup phase. Moat, we gave it a good rating, a broad rating right now. And Moat Direction, people were split between 3 and 5. I kind of went with 4. The growth here is going to be sensational, especially next year. The management team, I gave a 5 to. AI said 3. The risk here, offsetting that, is that the business risk is very high, and the valuation is obviously insane. But considering the risk is high and the valuation is crazy high, to get an overall score of 4 is pretty darn good. So I am personally going to put this on my watch list. And it's hard to come up with a price where I would like really be interested in this. And by the way, I can click right here just to see all the kind of notes. I did take a couple of notes on it, and there's my analysis that I did on it. Stoffel, is there anything else that you would like to check while we are here? Again, we are light on information, so I guess we'll go to the news tab over on Fiscal.
2 things that I would just real quick say is, 1, position size. We don't talk about it in Stock Simplifier.
Yeah,
but the profile that you just gave to me seems like an excellent profile for like a 1 or 1.5% position. Makes all the sense in the world. It does not lend itself to me to a 5 to 10% position for the type of investor that I am. Brian, the other thing I just want to talk about real quick is I did a reverse DCF. Now, the hardest is an optimized reverse DCF. So to be clear, guessing what...
So real quick, just explain what that means to people that don't know.
Yeah. So what the idea here is a reverse discounted cash flow analysis. The thing that's really neat about it is what it spits out is your blank needs to grow this fast over the next 10 years to justify today's stock price. Usually that blank is free cash flow.
Mm-hmm.
But that's really, really hard to figure out for most companies, but especially for a company like SpaceX, which is free cash flow negative. So what I do as a mental exercise is I optimize that free cash flow margin. Now, with some companies, optimizing isn't that hard. Like Kava is a stock that I own, and I can just look at Chipotle and be like, okay, Kava doesn't have those Chipotle margins yet, but they could and should in the future. There's no good comparison for SpaceX. So I went to Claude and I said, what kind of free cash flow margin could we be looking at? And what Claude said was, Connectivity could have a 30 to 35% free cash flow margin.
That makes sense.
Space could have 15 to 20%. AI is the widest uncertainty, basically 20 to 30%. So you get those, but then you've got to say, well, okay, how much does each one of those contribute? And so what it spit out was, give it a 20% free cash flow margin when it's fully optimized. If you did that, then it would have roughly $4 billion in free cash flow today. That number might not be exact, but roughly $4 billion. If you gave it that, then revenue needs to grow. Do you want to guess how fast revenue needs to grow? And I gave it a 4% terminal growth rate.
Wow.
Pretty high.
I'm going to guess 27%.
57%. So revenue needs to grow 57%, or those margins on a terminal basis have to be higher than 20%. One of those two things has got to give. Yeah. Either revenue needs to grow 50% plus for a decade.
For 10 years.
For 10 years.
Yeah. The rule of thumb that I always have in my head is if you can grow 40% per year for 2 years, you double. So at 57%, you're essentially doubling the size of the business every 15 months, maybe 17 months, something like that. And for today's valuation to make sense, that has to happen every year for the next 10 years. And then the growth rate slows to 4%, which is what, double global GDP growth, something like that.
I just did the math.
Yeah.
If you grow 57% per year for 10 years, you 91x.
91x.
So let's just round up and say 100x. And let's just assume that they've got $20 billion in trailing revenue. So is that 20 billion, 200 billion,
that's $2 trillion.
$2 trillion in revenue.
Yeah, revenue.
By 2036.
10 years from now, they have to 100x off of this base for today's number to make. And then if they do that, what return do you get?
10%.
10%. 10% per year.
Per year.
Yep. I would never bet against Elon doing that. No way am I betting against him doing that. But let's just say the expectations are high. This is why, I mean, it probably makes sense to go back to Meta's IPO and just remind ourselves what happens. If you go to Meta and just look at the price chart. Now, again, it's hard to.
You can put a minute and a max date in there though. So if you put the max date as put it as September 2012, the max date. Not you can leave the min date where it is because it'll go from the IPO. But September,
you're right.
September 2012, anytime in September 2012.
Just to January. 20.
There you go.
There you go.
So it fell what? Almost 60%.
At the peak? Yeah. Fell 50%. So this was the IPO. And then it was just straight down. Yeah, I think it IPO'd at 37 and then it fell to 17. I'm not predicting that that's going to happen with SpaceX because who knows? But it usually takes markets a couple of months for price discovery to really kick in on IPOs. So I think if you're interested in this business, and I see plenty of reasons to be interested in this business, I don't think you're going to get hurt all too much if you buy in thirds at the very least. I think there will be better opportunities to buy than there is today. Now, as a reminder, anybody that's interested in Stock Simplifier, it's normally $16 per month or $33 per month, depending on which plan that you choose. The Pro plan comes with that deep analysis that we just did. I think the deep analysis is absolutely crucial on difficult companies, especially like SpaceX and stuff like that. It's normally $33 a month or $3.99 per year. If you use the code that Stoffel is going to share, it's just $2.99 per year. And we will unlock for you, anybody that buys on this live call, the Buffett method we will unlock that for you for free as a special bonus, but that will expire as soon as we get off this call. And it has all these have a 30-day money back guarantee. So if you just want to try it, see if you like it, and kick the tires, you can absolutely do so. 30 days money back guarantee. On
couple quick things I just want to say real quick. First of all, I already see a couple purchases of Stock Simplifier rolling in, so thank you. We'll make sure that we send you that Buffett method for free, which is great. But also just one other thing that I think is worth talking about here. What happens if Tesla merges with SpaceX? Now, here's the thing. That would not be, that is not it's unprecedented for a merger at that scale to happen. $2 trillion companies merging together. But it is not unprecedented. I don't know about you, Brian, but Elon once acquired a company called Solar City.
Yep.
Which was run by his cousin.
Yep.
And rolled it in. And by all accounts, that was not a good move. But Tesla was so
it was like a $2 billion acquisition. It was basically a bailout of his cousin. And so far, the Tesla solar business has been extremely disappointing. And that was a 10+ year over thing. But this would be if current prices hold, a $3 trillion company merging with a $1.5 trillion company. They should just change the ticker to Musk at that point. Or probably they'd probably get X if they really went for it. But would that go through? Would that go through regulatory? I mean, I can imagine the politicians that would be screaming about that to happen. Although I don't see why it wouldn't be. Anyway, if that happens, as complicated as this business is right now, and boy, is this business complicated, the financials would become a disaster to look through. I think you need a black belt in accounting to really dive deep into the numbers of this company today. And if they merged, like it'd be unbelievably challenging to analyze that combined company, and the numbers would just be ugly, like so hard to analyze for at least a full
ugly as in
hard, just plain out hard to analyze the company. But I'm sure the growth numbers would be off the charts.
Brian, couple quick questions. Chris was asking, will there be a replay of this?
Absolutely.
Cool. And
same link you clicked, same link you clicked to get here. The replay is there.
And Kunyet, send us an email at brian@longtermmindset.co with your question. We can definitely talk to you about your question.
Totally agree, Brandon. Totally agree with that. All right. Well, thank you guys so much for joining us today. We hope that this was helpful. A fascinating, absolutely fascinating business to look at. In tomorrow's newsletter, which is Long-Term Mindset, we're going to be issuing out 4 companies to vote on for next week's deep dive. And I have a feeling, Stoffel, we're going to be revisiting this company in the not too distant future as things change and as information comes out. But this is going to be a fascinating company to follow. And for me personally, I like to give IPOs at least a couple of months to settle in before I get comfortable with them and see how they perform before I would take a position in it. But actually, aren't we all going to become shareholders if you have like an index fund?
It's not going to happen for a little bit, but it will happen. Brian, I'm sharing this for us, but I'm also sharing this for our friend Justin, who I know is listening, because Justin is the one that built Stock Simplifier. Jen said to any newcomers considering joining or signing up for the pro version, Jen's initially thought it was a steep cost, was concerned that they wouldn't have enough time to dedicate to this. But today, a couple of months later, it's been one of our beta testers. He can confidently say yes. So awesome. It'll be there.
Cool. Well, thank you guys so much for joining us. We will see you next week. Stay safe out there. Bye, everyone.